Welcome to Scalp Society. Today I'm going to show you an extremely powerful and rarely known scalping strategy. This strategy uses a free plugin, which is a copy of a very expensive one, yet performs extremely well. You can use this trading technique on many different trading instruments like stocks, crypto, Forex, bonds, gold, and so on. We're going to be looking into Bitcoin on the 15-minute time frame, as I found it produces the best results. Let's get into the strategy setup. First, we're going to open up our Indicators Search tab and look for Fumanchu. We're going to add the Fumanchu Cipher B plus divergences to our chart. We're going to open up the settings for the plugin and remove regular divergences. We can also get rid of the stochastic. Next, we're going to open up the style settings and untick the VWAP. The next step is to add two EMA lines. One is going to be a 200 moving average. And the next one is going to be a 50 moving average. Now a little explanation on the Cipher B plugin. In the middle we have the money flow, which turns green when it's above the zero line, and turns red when it's below the zero line. Next we see the blue waves, and the red and green dots which indicate crosses. Now the green dot is a cross up, while the red dot is a cross down. Let's get into the rules for this strategy. We're only going to enter long positions when price is above the 200 moving average. We're only going to enter short positions when price is below the 200 moving average. For a long position, we're going to be looking for a pullback to the 50-period moving average. For a short position, we're going to be looking for a pullback into the 50-period moving average as well. Next, we're only looking to enter a long position when the money flow is in the green and the blue waves are under the zero line. Same goes for a short entry. We're going to look for the money flow to be in the red and the blue waves to be above the zero line. Now the blue waves give us an entry signal with the cross signal. Let's take a look at a few examples to understand it better. We're going to take a look at a long setup. We can see that the price is moving above the 200-period moving average, so we're only looking for longs. Here we see a pullback to the 50-period moving average and a cross up. We check the money flow and see that it's in the green. Next, we look at the blue waves and we see a cross to the upside marked with a green dot. All conditions are met, so we open up a long position. We set up our stop loss at the previous swing low and target a 2-to-1 risk to reward ratio. Now let's take a look at how a short setup looks like. We can see that price went below the 200-period moving average. We had a pullback to the 50-period moving average and a move back down. Money flow is in the red and the blue waves are above the zero line and signal a cross down. All conditions for a short are met, so we open up our position. We set our stop loss at the previous swing high and target a 2-to-1 risk to reward ratio. Okay, now that the rules are clear, I'm going to backtest this strategy 50 times to see how well it performs. Okay, so 50 trades are complete, and here are the results. Out of 50 trades, 33 were winners and 17 were losers. This totals to a 66% win rate. Now we used a 2-to-1 risk to reward ratio and risk 2% of our account on every trade. Taking this into consideration, our total gain on the account is 98% in 50 trades. Thank you guys so much for watching, and if you found this video helpful, please make sure to drop a like on the video and subscribe to our channel.